Earlier in the show, shares of Lucent have been hit hard today after the telecom equipment maker revealed that it was reducing revenues in its last quarter and may not be making its forecast for the current quarter. Joining us now with more on this is Tom Lauria, telecom equipment analyst with ING Barings. He comes to us today live from Boston. Tom, good to have you with us.
Great to be here.
What's going on at Lucent?
Yeah, the company did put out a release today just indicating that had a revenue recognition issue with about $125 million worth of revenues for the September quarter. And so it looks as though they'll need to restate numbers for that quarter and take those revenues away, and as well about 2 cents of EPS.
And how did that happen?
It's unclear at this point. It looks as though, the company is providing fairly limited amount of information. It's understandable given the legal implications and the other issues that are associated with this type of situation. But yeah, it looks as though $125 million are coming out of the September quarter and about 2 cents in earnings. So apparently very high margin revenue for the company, and we'll have to stay tuned and really find out more in the weeks ahead.
This is the most widely held stock, if not the second most widely held stock in America, and clearly investors have lost a lot of money. I mean, down 75% year to date on Lucent Technologies. Are there any signs, or what should we be looking for as far as when this stock hits a bottom? I mean, they've already gotten rid of the CEO, Rich McGinn, and still more problems. Yeah,
it's absolutely something where the company really needs to focus on executing on the enormous opportunity that's at hand. Clearly in the year 2000, Lucent is losing market share to arch rival Nortel, and that company had posted or is expected to post optical revenues for this year in excess of 130%. So Lucent pretty much is having a flat growth year for optical networking systems, and so clearly share is going toward Nortel. It is in fact executing on an OC192 opportunity now, but with a fairly limited customer set. I think what we're really seeing with the stock, though, as it's getting into this $18 range, is that we're nearing the intrinsic value of the microelectronics spinoff. So that's the component business that'll be IPO'd in the March 2001 timeframe, and then fully distributed to shareholders in the summertime.
Okay, so that possibly in '01 could represent a catalyst. You mentioned Nortel. You just came out of the meeting, correct?
Yes, I did.
How was the meeting?
I think it was a fairly good meeting. The company reaffirmed its previous guidance for the upcoming year, and so I think that gave investors some confidence. I felt good about the meeting. I know there's always issues about CLEC spending, slowing capital spending, but we really are in a market that is about $250 billion in size this year, growing to about 380 or so billion in only 3 years. So the best positioned companies will add $180 billion to their top lines.
What did the company say specifically about the telecom spending slowdown?
I think it really sees the spending slowdown in certain areas of low growth. Obviously, the circuit switching market in decline. We've been expecting that for quite some time. We're starting to see it now. It also said that although the market is declining in certain segments, it is still expecting 2000 to end with growth above 20%. So I think that's a fairly accurate number at this point, and I think 2001 may be somewhat below the 20% threshold, but again, good opportunity for the companies that are positioned in the right segments of the market.
Very, very quickly, Tom, I just want to know, what is Nortel doing right and Lucent doing wrong?
I think overall, Nortel executed on an opportunity in optical networking systems in OC192, and it's kept that competitive advantage through today. And it's very difficult to get into the market with an OC192 system, and it's executing, though, beyond the optical areas into wireless and optical metro. So good strength across all areas of Nortel's business. I think it's just executing on an opportunity, and frankly, it doesn't have the loss of 2 major customers that Lucent has this year with Saudi Telecom and as well AT&T in the optical space. So Lucent is fighting a battle to grow revenues for the year 2000 at about 15% or so, and overall, if you take out those 2 customer impacts, you clearly would have a stronger 2000, but of course you would have had a weaker 1999 at the same time.
Okay. Tom, thank you very much. Very valuable insight from the Nortel meeting in particular. No one's back from that meeting. You were the first, and we appreciate it.
Thanks so much. Have a great day.
You too. Tom Lauria, telecom equipment analyst with ING Barings, has been joining us today live from Boston. Let's get a check on how the sectors of the market are doing today, and of course, Michelle Cruz-Cabrera here to do just that.